Even the titans of industry are not impervious to the shifting winds of market trends. Tesla, headquartered in Austin, Texas, has long been synonymous with innovation and dominance in the electric vehicle (EV) sector. However, recent developments suggest a turbulent road ahead for the EV giant. Despite years of rapid growth and a formidable position in the global automotive landscape, Tesla now faces challenges that threaten its stability and supremacy. From plummeting profit margins to production setbacks and market struggles, the company is at a crossroads, grappling with a series of crises that may herald its biggest disaster yet. In this video, we delve into 6 critical factors contributing to Tesla's predicament, shedding light on the precarious terrain it navigates in the ever-evolving EV market. Number 6. Profit margins are going down. After several years of magnificent growth, Tesla found itself as the most valuable car company in the world due to its ability to make huge profits on electric vehicles. At the time, everyone else was losing money. But things started to change lately, and Tesla is no longer such a dominant force, even though it still remains the only Western company that knows how to earn money on battery electric cars. But numbers don't lie. Things are going in the opposite direction from what's expected. The results from the first quarter show that net income fell 55%, while the total revenue went down by 9% to $21.3 billion. Tesla is no longer the biggest moneymaker in the industry, as that position has been taken over by Toyota, as the Japanese company has been enjoying impressive income rates lately. Consequently, the gross margin also fell in the previous quarter to 17.4%. And there are many things to blame. Tesla officials already pointed out various challenges, starting from the Red Sea conflict, the arson attack at Gigafactory in Germany, etc. But probably the biggest indicator of the potential disaster is the fact that sales are down. For the first time in years, Tesla saw a fall in sales by a respectable 8.5%. Interestingly, we haven't heard much from Musk on this matter, even though the company has announced the strategy for future growth, which includes the introduction of the budget-friendly Model 2, among other projects. Number 5. Troubles in Cybertruck heaven. The Cybertruck is finally here after years of waiting and numerous launch delays. But things didn't start so smoothly for the Austin-based company. Namely, soon after the launch, complaints about the build quality appeared, which led to the first recall of the futuristic pickup truck. Namely, one of the Cybertruck owners shared a video that shows a big flaw in the design of the accelerator pedal, with a cover that can easily slip forward and become lodged in the interior, which can lock the car in full acceleration. Eventually, the recall was issued, while NHTSA came up with the announcement that said an approved change introduced lubricant to aid in the component assembly of the pad onto the accelerator pedal. Residual lubricant reduced the retention of the pad to the pedal. The agency also stated that if the pad on the accelerator pedal becomes trapped in the interior trim above the pedal, the performance and operation of the pedal will be affected, which may increase the risk of a collision. Note that application of the brake pedal will cut drive torque, including when both brake and accelerator pedals are pressed, and continued application of the brake pedal will bring the vehicle to a stop as quickly as if the accelerator pedal was not pressed. And while Musk has not been specific about the number of Cybertrucks affected by this design flaw, some sources estimate a recall of around 4,000 models. The latest report suggests that the planned owner notification date is not until June 18th. Number 4. Tesla is cutting 10% of the global workforce. The impressive growth of the sales numbers, of course, was followed by constant growth of the workforce, especially in the last 5 years. Back in 2019, they had 48,000 employees, and by 2021, the number went over 100,000, while the peak was in late 2023, when the total count was over 140,000 employees. Moreover, the company announced further plans for expansion, including the new Gigafactory in India, for which Tesla is still searching for the perfect location. But in the meantime, things are not developing as expected, with sales slowing down and increased production, which led to oversupply. Tesla plans to balance things a bit in these challenging times. The company needs to cut costs, and as usual, the easiest way to do this is to lay off some workers. And according to the latest reports, the number isn't small at all. Considering that Musk announced a 10% cut in the workforce in numbers, that would be around 14,000 workers around the world, 6,000 of them in the United States. Number 3. Massive price cuts continue. The EV growth has slowed down, and that's a fact. Consequently, the balance between supply and demand has been interrupted so much so that every EV maker struggles to sell out its inventory. Simply, the phase of early adopters has gone, and the middle class still can't find electric cars a particularly appealing offer for numerous reasons. In such circumstances, where supply has increased 5 times over the last year or so, automakers are figuring out new ways to attract new customers. And of course, discounts are one of them. Tesla was the first to start this trend, which would soon enough turn into a real price war. Tesla cut the price of its most popular models, the Model Y, a couple of times during 2023 and early 2024. So if we could compare the prices over the last 12 months, it turns out that the price has gone down by 21%. In January last year, the average price was around $63,000, and in January 2024, it was around $5,000. A few weeks ago, we saw another price cut by $2,000. The base model of the Model Y now starts at around $446, and the story doesn't end there. The Model Y also qualifies for a $7,500 federal tax incentive, so it doesn't come as a surprise that, according to Cox's Automotive in some cases, you can lease the Model Y for less than $400 a month. Today, Tesla also offers massive discounts on its advanced driver assistance software, full self-driving, which went down from $12,000 to $8,000. Number 2. Model 2 cancelled. With the market focus shifting towards the middle class, Tesla developed the strategy to overcome the current market growth slowdown long ago. The idea was to offer a small and affordable EV, which would cost between $25,000 to $30,000, and which would finally allow the masses to embrace the new EV technology. The idea was to offer a small EV by 2025, but according to the latest reports, that's not going to happen. Reuters recently reported that the small EV, commonly called the Model 2, is not going to happen. The project has been abandoned because of development challenges in the current market climate. So instead, Tesla is going to put all of its forces into the robo-taxi project, the company's first driverless vehicle that'll serve as a taxi. The premiere is planned for August, when we're about to hear more about the launch date and other specific details. Meanwhile, the Model 2 project seems to be stopped, considering that Musk has never clearly dismissed the Reuters report. Number 1. Troubles in China. Tesla's struggle isn't just related to the US market, it's a global thing, as the company is also facing many challenges in its second most important market, China. There, the sales are also going down, and there are 2 main reasons. One of them is the fact that the Chinese economy is not in the best shape. After years of massive expansion, it looks like the first signs of fatigue have appeared. Chinese citizens are facing many economic challenges. The unemployment rate is high, while the real estate market is near collapse. Consequently, the automotive market is regressing as well, to the point where EV sales have slowed down significantly. And Tesla isn't the only company that suffers. The same thing is with the domestic EV makers. These companies are Tesla's biggest fear, because we all know how much China has been investing in EVs over the last decade. BYD has managed to create a strong product lineup, which seems to be more appropriate compared to Tesla's current offer. Then, BYD also imposed a massive price war, which Tesla struggled to follow. Altogether, this led to a massive stumble from Tesla's side, to the point where the first quarter of this year ended with just 300,000 sales, which is a massive 42% drop compared to the fourth quarter of 2023. Thanks for watching, and see you next time.